Have you ever heard of the phrase, the government has a hole in its budget, and wondered what it actually means? It sounds dramatic, but in reality, it's just accounting, very similar to the way you or I might look at our own bank balance when we are spending more than we are earning. Now, to make it simple, think of the government like a household. You have a current account at your bank. Your salary comes in and your bills go out. If your bills are bigger than your salary, your bank balance keeps going down. And if you don't fix that problem, eventually you'll run out of money in the account, even though you might still have the option to take out a loan. That is essentially what happens to the government. In the United Kingdom, the Treasury has an account at the Bank of England called the Consolidated Fund. You can think of it like the government's current account. When the government spends money on things like schools, hospitals, or pensions, money flows out of this account. When people and businesses pay taxes, money flows in. Now let's look at the accounting in practice. Suppose the government pays a contractor £100 for road repairs. The Treasury's account at the Bank of England goes down by £100. At the same time, the contractor's bank gets £100 more reserves at the central bank. And finally, the contractor's deposit at their bank goes up by £100. The central bank's balance sheet still balances because reserves go up while the Treasury's balance goes down. So where does the idea of a hole come from? Well, imagine the government is spending £120 but only collecting £100 in taxes. Every day, the Treasury's account at the Bank of England is being drained faster than it's being refilled. The gap, that missing £20, is what people mean when they talk about a hole in the budget. It's not that the central bank forgot to make a double entry, it's simply that the Treasury's own account balance is shrinking because outflows are bigger than inflows. The next logical question is how the government fixes this hole. It does it in the same way you or I might if we had more expenses than income, by borrowing. The Treasury issues gilts, which are government bonds. Investors buy those bonds using money from their bank accounts. Their banks then transfer reserves to the Treasury's account at the Bank of England. This process means that the Treasury's account balance goes back up and the government can keep making payments. Now, when people talk about the size of the hole, it is usually measured across different timeframes. The most common way is annually, because government budgets run year to year. If spending across a financial year is larger than revenues, the result is an annual deficit. Economists and politicians often focus on that figure because it tells you whether the government is living within its means over the year. Now, alongside this, statisticians publish monthly figures that show whether the government borrowed in a given month. These monthly numbers are then added up to give a cumulative year-to-date picture of how much has been borrowed so far. And finally, behind the scenes, the Treasury manages its account day by day, making sure there is always enough cash at the Bank of England to meet payments, even if tax receipts and spending do not line up perfectly in timing. Now, when you look at the big picture, a hole in the budget is not a missing entry in the accounts. It's just a shortfall, where government spending is greater than government income. On the balance sheet, it shows up as the Treasury's account balance at the central bank falling. The way to plug it is either by raising more taxes or issuing more gilts. If you found this video helpful, don't forget to like, subscribe, and hit that bell icon for more videos just like this one. If you're keen to learn more about finance, be sure to check out the industryportal.com, link in the description below. Thanks so much for stopping by, and as always, keep growing, keep learning, and I'll see you in the next video.